To the risk events video for the week beginning the 24th of August 2015. Now, as you can see, if you look at the calendars, I'm sure you have, there's absolutely nothing going on. The week doesn't really kick off until Tuesday, Wednesday in the week. There's not really anything much happening, but we'll go through it every day anyway. We'll go through it. Monday the 24th, there's absolutely nothing going on. The 25th, which is where we'll start, we've got inflation expectations from New Zealand. This isn't particularly important. This will be an insight because it's basically telling us what businesses are kind of viewing, how they're viewing the inflation environment. Do they expect it to pick up? Do they expect it to fall? And with recent drops in commodity prices, we could see a loss of confidence by these businesses and industry around New Zealand, because obviously New Zealand and Australia are very commodity-based or commodity-focused economies. So this could potentially be slightly negative for the New Zealand dollar, and the commodity currencies, think Canadian dollar, New Zealand dollar, Aussie dollar, they've all got absolutely battered as the week's opened off the back of those falls in commodities. Also safe haven flows off the back of concerns over China. That's what's dominating the headlines as we go into the week. So that's what we're going to need to keep our eye on more than anything. This week is not going to be about data. It's going to be about that. It's going to be about China. It's going to be about the Fed. It's going to be about the interest rate hikes. Are the Bank of England and the Fed still going to hike rates in the next 12 months? If commodity prices keep getting battered and if things keep deteriorating in China? That's the question the markets are trying to answer, and because they don't know the answer to that question, or they're not as sure about the answer, that's why they're leading to safe haven flows. It's uncertainty. The market hates uncertainty more than anything else, and that's why the Japanese yen's getting bought like it's going out of fashion, and the yen pairs are absolutely dumping as the week opens because no one knows what's going to happen next. Everyone's unsure, and basically everyone's scared, effectively. So they want to put their money into their safe havens. Think Japanese yen, think Swiss franc. That's where their money's going. Unwinding those traditional positions, so long the dollar, short euro, all those positions are being unwound because maybe they've got it wrong over the last few months, and maybe the Fed aren't going to hike. That's what's going on. So that's what you need to keep your eye on. Now, in terms of data, we've also got German IFO business climate, we've got CB consumer confidence on the US, and we've got trade balance on New Zealand. None of these is expected to move the markets too much. Like I say, it's all dominated by this thing going on with China. These data points won't make too much difference either way. If we get negative data from the US, even the little points like consumer confidence, this could add to the concerns that the Fed aren't going to hike at any point during 2015. As that gains momentum, the dollar has got a lot further to fall yet, believe me. Okay, dollar yen could hit 115 if it keeps going, etc. So you need to keep a very close eye on that, but on their own merits, generally, not really interested in those data points. If we go to the 26th, we've got Governor Stevens speaking from Australia. Be interesting to see what he says concerning China and the recent rout in commodities. Is that going to be a concern for the RBA? Is that going to make them more dovish? Or are they still kind of playing it cool, sitting on the sidelines just to wait till it blows over? I've got a feeling they'll kind of be waiting to see if it blows over. But if they do show concern, if they do indicate that this could make them act sooner, could see a further sell-off on Aussie dollar. We've also got core durable goods from the US. Again, this is just US data that we want to keep an eye on. Another thing we want to keep an eye on is the Fed. We want to see all the FOMC members speaking. We want to hear what they've got to say. What are their concerns? What are their plans? How are they viewing everything that's going on in the markets right now? So that's what you need to keep a very close eye on. And the other thing, of course, is crude oil inventories. Anything to do with commodities is going to be watched by the markets particularly closely. So crude oil inventories, oil's been dumping. Will it get below $40 a barrel? Will it get into the 30s and stay there? Will it get down to the 20s? That's the question. That's what, again, something the market's panicking about. So those data points will be very good to keep an eye on. As we go to Thursday, August 27th, we've got private capital expenditure in Australia. Previous was negative 4.4. This is only expected negative 2.5. Not as bad as it was previously. It's still pretty negative, but it's not as bad. And of course, Aussie dollar's under pressure anyway. So, you know, it's one to watch, but it's probably not going to move the markets too much. Then we've got preliminary GDP from the US. This is expected to come out 3.2%. It's a big one. GDP is one of the big three. Is it big enough at the moment to ease concerns? Probably not, because the concerns are all about inflation and the drop in commodity prices and, of course, the deterioration in China. That's the concern. So if that's the concern, does anyone care about GDP? Probably not. All the focus is going to be on inflation readings going forward. And most importantly, the Fed, what the Fed say in the short term. So the inflation readings aren't due out for another few weeks, but the Fed will be speaking. Okay, comments and stuff will be happening over the next few weeks. That's what the market's going to be paying attention to. So this GDP reading, although generally it would be a big one, it's not something I'm going to be particularly concerned about because I don't think that can change the flow on its own. Unemployment claims, exactly the same. And of course, pending home sales as well. We do have the Jackson Hole Symposium. Again, potential for, all the central bankers together in one place. This is potential for comments, concerns, questions to be answered by the from the press. it's one to keep your eye on. Again, as we've said, you want to keep your biggest eye on the comments from the central bankers, particularly Fed and the Bank of England, about what they're thinking about this crisis that's going on, this period of safe haven volatility, let's call it, in the markets. Finally, we've got Friday. We've got second estimate GDP from the UK, which is expected to come out in line with previous. And of course, we've got goods trade balance from the US. We've got a whole host of US data there as well. And we've also got CPI from Japan, which is expected to tip into the deflationary territory. Now, again, October is looming. October is when the Bank of Japan reset their forecasts and goals. So it'll be very interesting to see whether they do that in line with more action. There's a lot of rumours going around that they'll introduce more QE in October, particularly if these CPI readings fall into deflationary territory. That could kick them into doing more. So very important to keep your eye on that, because that could cause big moves on Japanese yen, especially if this Chinese crisis lasts a long time and it keeps strengthening the yen. That's another headache for the Bank of Japan to deal with. Okay, so very interesting to see how that plays out. And we could be getting towards that point where the Bank of Japan add to their QE program and do more. That would be a very interesting scenario, which could lead to fireworks. So you need to keep your eye on that as well going into that. So generally, what's the summary for this week? Not much going on in terms of data. Lots going on in the market. Don't focus on the data. Focus on the market. Focus on the safe haven flows. Focus on the crisis in China, and remember, most importantly, focus on the central banks. What are the central banks thinking? What are they saying? Because it's that, when the market kind of latches onto that, that's what's going to be moving price action. As long as everyone's confused and uncertain, and those questions haven't been answered, expect the uncertainty, expect the yen the yen pairs to keep selling off, expect commodity currencies to keep getting battered. Just trade in line with that. But be careful, because it's very volatile. The safest way to trade is to just look out for what the central bank are thinking. And as soon as we get some kind of semblance of normality or stability, let's say, that's what you want to trade in line with. So be very, very careful this week. It's not a week for trading data, as we've said. That's what you need to keep a focus on. A nice short and sweet video this week, but it's a very, very volatile world out there. Currencies moving like haywire, different directions. Be cautious. Definitely use stops and don't take too much risk. Hopefully, that information, we can use that to make some pips. Or I think the most important thing is not to make pips this week, is to preserve the pips we've already made, definitely. So make sure you have that in the forefront of your mind. Don't take too many chances. Keep your